Tech stocks weigh on Wall Street. Australia trying to stick it to tech. U.S. weekly jobless claims unexpectedly rise. Walmart sees sales slowing in 2022. I'm Mike Wallace, and this is TFT Nightly News presented by eToro. Trade with confidence on the world's leading social trading platform. Australia's fight with Facebook as it seeks to force the social networking site to share revenue from its news stories taps into a desire to stick it to the site.
An American tech analyst told Reuters that Australia's standoff with Facebook and Google has become more about fighting big tech rather than reimagining journalism. Australia is pushing ahead with a law that will force Facebook and Google to pay news outlets for content. Early Thursday, Facebook responded with a blackout, blocking news pages and more on Australian users' Facebook feeds. Eric Goldman is the Associate Dean for Research at Santa Clara University Law School, and he says this standoff won't help answer a bigger question. How do you keep struggling sources of news alive?
I don't think this kerfuffle is going to cause people to rethink how we fund journalism. I fear it comes down to the idea that so many people are skeptical of the power and money that are in the hands of Google and Facebook, and they will look at this simply as a way to stick it to them.
Goldman says the debate needs to consider the social impact of placing news content online.
So long as this becomes a battle over the power and money in the hands of internet companies, it obscures the really important social questions that we have. What information is being produced, who's producing it, what incentives do they need, and how is that helping us stay safe and make good political choices at the ballot?
It's uncertain what will come of talks between Australia's government and big tech. But as of Friday morning, it wasn't just news sites scrubbed from the social network's local feeds. Several charity, nonprofit, and even neighborhood Facebook groups remained dark.
The number of Americans filing first-time applications for unemployment benefits unexpectedly rose last week, but the labor market is steadily recovering as additional fiscal stimulus and falling COVID-19 cases allow more services businesses to reopen.
A lot more Americans than expected filed jobless claims for the first time last week. The Labor Department reported Thursday that initial claims for unemployment benefits rose to 861,000. That surprised economists who had forecast 765,000 applications. The temporary closure of auto plants due to a global chip shortage may have been partly behind the rise in claims. Although applications are still stuck above their 665,000 peak during the Great Recession after dropping from a record 6.9 million in March, there's reason to be cautiously optimistic. Coronavirus infections have been declining since mid-January. So have hospitalization rates. Plus, retail sales grew by the most in 7 months in January, and Congress is considering President Joe Biden's massive $1.9 trillion recovery package. And a Federal Reserve report said most Fed officials see progress in vaccinations leading to what they see as a sizable boost in economic activity.
Stocks on Wall Street closed lower on Thursday as investors shifted out of big technology names, while an unexpected rise in weekly U.S. jobless claims pointed to a fragile recovery in the labor market.
Stocks on Wall Street closed lower on Thursday after a worse-than-expected report on jobless claims pointed to a fragile recovery in the labor market, and a decline in tech stocks such as Apple and Facebook weighed on the S&P 500 and the tech-heavy NASDAQ, with Facebook shares dropping 1.5% as Wall Street assessed the wider ramifications of its move to block all news content in Australia. The Dow and S&P both closed down about 0.4%, while the NASDAQ lost 0.7%. Progress in the vaccination rollout, plus strong earnings and hopes of a $1.9 trillion federal stimulus package had helped U.S. stock indexes again hit record highs earlier in the week. But after a months-long rally, Thomson Reuters stocks buzz analyst Terrence Gabriel says the market could now be at a turning point.
The conditions are there in terms of overly bullish sentiment, a lot of complacency, very overheated internal measures and market momentum measures. So the conditions are there for the market to be at an important turning point. So certainly we have to watch the way any kind of decline starts to develop in terms of how broad it is.
Meanwhile, retail giant Walmart slid 6.5% after missing quarterly profit estimates and forecasting a slowdown in sales and profits for the year.
We always felt comfortable with our liquidity.
Thursday's action on Wall Street came as the heads of online broker Robinhood and hedge funds were being grilled by lawmakers in Washington over the GameStop saga, which saw retail investors drive up the video game company's stock, hitting hedge funds who had been betting against the company.
The head of trading app Robinhood and Wall Street hedge fund managers on Thursday fielded a barrage of questions in the U.S. Congress about their role in the GameStop trading frenzy, at times being cut off by irate lawmakers.
I don't have time. I just need a yes or no answer.
Wall Street hedge fund managers and the CEOs of Robinhood and Reddit were among those grilled by U.S. lawmakers Thursday about the recent Reddit-fueled trading frenzy that sent shares of GameStop soaring. But amid the often fiery exchanges and finger-pointing, the most clarity may have come from Reddit user Keith Gill, who promoted his investment in GameStop on social media and who is otherwise known as YouTube streamer Roaring Kitty.
A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis.
He's one of 5 men at the center of the saga, which roiled Wall Street in January, prompting probes by several federal and state agencies. Billionaire Republican megadonor and Citadel CEO Ken Griffin was among those who defended their businesses to the Democratic-led House Finance Committee, which probed how Reddit users trading on retail platforms such as Robinhood squeezed hedge funds that had bet against shares of GameStop and other companies. Griffin, majority owner of Citadel Securities, a Robinhood market maker, was castigated for evading his question about whether market makers provide the same prices to all brokers.
The Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my question by making up other questions.
The Reddit rally drove massive volatility in GameStop and other shares, prompting the post-trade clearinghouses that guarantee trades to call for billions of dollars in extra collateral from Robinhood and other retail trading platforms. In response, Robinhood and other platforms suspended buying in GameStop and other affected stocks on January 28th. Lawmakers from both parties were outraged and questioned if the trading platforms were siding with hedge funds over retail investors, something Robinhood CEO Vlad Tenev denied.
We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest.
Tenev said the situation would have been significantly worse had Robinhood not suspended buying. Speaking of which, buyers briefly scooped up GameStop shares on Thursday, reversing the stock's morning losses after Gill, aka Roaring Kitty, said he remained bullish about the stock following its recent rally and sell-off.
As for me, I like the stock.
Behind him while he spoke was a poster of a kitten with the caption, "Hang in there," an apparent message to fellow GameStop investors.
Walmart on Thursday forecasts slowing sales for fiscal 2022, following a blockbuster year that saw demand for essentials and other items soar as consumers flocked to the retailer during lockdowns.
Sales surged at Walmart in the holiday quarter, but the company predicts that'll slow down in fiscal 2022. The world's biggest retailer forecast Thursday that adjusted net sales will grow in the low single digits in the year ending in January. That's much slower than the 8.5% growth seen last year. The company also projected earnings that falls short of analyst targets. Contrast that with last year when demand surged as consumers flocked to the retailer to pick up essentials and other items amid the lockdowns. Walmart also reported that pandemic-related costs that include higher wages for warehouse workers and expenses for cleaning its stores amounted to over $1 billion. That, along with the dour forecast, sent its shares down more than 6% in early trading Thursday. That overshadowed a strong quarter that saw same-store sales jump 8.6% as shoppers used their stimulus money to buy electronics and toys amid an earlier start to the holiday season. Online sales grew 69%, twice the pace in the period the year before. Its own employees will have more money to spend, too. Walmart said it is raising wages for its U.S. workers to an average of more than $15 an hour.
And those are the latest from around the world. I'm Mike Wallace, and this is TFT Nightly News.